Hey everyone, and welcome to our deep dive. Today we're taking a close look at Marathon Nextgen Realty Ltd. Uh, their financials are out, and we really want to get a good grasp on how they're doing, like what their performance is telling us, and what it might mean, for their future.
Well, it's interesting because, Marathon, they're kind of playing this long game, right? I mean, they're a major player in Mumbai. They've been around for over 54 years. And they've built everything, like, from those huge townships to those, like, crazy luxury skyscrapers you see in magazines. They've already completed over 100 projects. And they have developments all across Mumbai.
Yeah, they're definitely a company that keeps evolving, right? Like on their website, they talk about all this design-driven development and uh, engineering excellence. You can kind of see this commitment to innovation in a lot of their recent moves. But before we get into all that, maybe let's break down their current financial picture. We're looking at the quarter and 9 months that ended December 31st, 2024.
Yeah, and the first thing that really jumps out at you is this, like, contrast. Their revenue from operations is, well, it's down quite a bit.
Oh, really?
Yeah, compared to both the last quarter and the same time last year. Like, we're talking a drop to 3,892.11 lakhs in Q4 2024, down from 5,324.41 lakhs in Q3 2024. And then when you compare that to the same quarter in 2023, it's even more of a drop from 11,900.59 lakhs. Total income followed the same, downward trend.
So less money coming in overall, which, I mean, you'd think that'd be a red flag, but then their net profit, it's actually up year over year.
Right.
So how does that even work? Like they're making less money, but somehow they have more profit.
Right. Well, that's where the details really start to matter, right? I mean, profit's not just about the revenue coming in. It's also about what you spend, the
Right.
difference between the two. If you really look closely at their expenses, you'll see some pretty big changes, especially in like changes in inventories and their expenses for property development.
Okay, so changes in inventories. What does that even mean? I mean, we're talking about real estate development, right? Seems a little technical.
Yeah, so think of it like this. For a real estate developer, inventory is basically all those unsold properties or projects, they've got on their books. Changes in inventories is basically showing how much of that unsold inventory they've either, added to or sold off during like the reporting period.
Okay, so a big change in that category could mean that they're either like really ramping up construction on these new projects or they're, really good at moving a lot of that existing inventory.
Exactly. And then you have the property development expenses, which that includes like everything. The cost of those building materials, labor, marketing, sales costs. Changes in those expenses can be a sign of whether the company is, tightening up, like maybe delaying new projects, maybe getting better deals on materials, or, they could be investing a ton in growth.
And for like the average investor, how does all this affect them? Is there a way to like measure how these changes in their finances are impacting the value for shareholders?
Oh, absolutely. One really important thing to look at is basic earnings per share, or EPS. Basically, that tells you how much profit they made for each share of stock they have out there. Even though their revenue dropped, their EPS actually went up, year over year.
Ah, interesting.
So yeah, even though the total revenue is down, the value they're giving to each shareholder is actually going up.
So it sounds like they're being really smart about their money. But I mean, there's always more to the story than just the numbers, right? Like their reports also mentioned that they just merged with a subsidiary, Marathon Nextgen Township Private Limited.
Right, exactly. And it was called a common control transaction, which basically means it was consolidating operations that were already like, under Marathon's control.
Okay.
So it makes their structure simpler, but it also means we really got to compare these financials to what they did before, keeping in mind that this change happened.
Okay. They also got into this revenue sharing agreement for their Future X commercial project. They're giving a 43.58% share to another entity called Marathon Realty Private Limited. And that shows up in their expenses. Is that pretty common for like big real estate projects?
We are seeing that more and more, especially for these huge projects. It lets developers share the financial risk and sometimes even get the expertise of, another company. It'll be interesting to see how that agreement ends up affecting their profits on this project as it, moves forward.
And they've been like on this acquisition spree. They picked up Conchi Rehab Private Limited, Nexzone IT Infrastructure Private Limited, and Nexzone Water Management Private Limited. It's like they're building their own real estate dream team or something.
Yeah, it's definitely a pretty aggressive acquisition strategy, and it could mean that Marathon is thinking beyond, just constructing buildings. Bringing Conchi Rehab in could mean they're moving into that really profitable redevelopment sector in Mumbai,
Mhm.
where they take older buildings and either tear them down or fix them up to make, these modern spaces.
And those Nexon acquisitions, those are interesting. Focusing on IT infrastructure and water management. That seems, I don't know, kind of outside what a real estate developer normally does, right?
It does seem that way at first, yeah. But think about it. What are the most important things for any big real estate project these days? Reliable IT infrastructure, that's huge. And then with everyone worried about water shortages, especially in cities, having your own water management team, well, that's a really smart
So
move.
it's like they're not just building the buildings, they're building like this whole little world around their projects,
Right.
controlling everything from top to bottom.
Exactly. It's a really bold move, but it could be a genius strategy in the long run. It means they don't have to depend on other companies, and it might even help them improve quality and, be more efficient. And they might even make more money from it. It definitely shows that Marathon isn't afraid to try new things and adapt to how the real estate market's changing.
So here we have a company, their revenue's down, but their profit's up. They're managing their money really well, and they're making these strategic moves to like set themselves up for success in the future. But before we get too deep into what might happen, maybe we should take a pause here.
Yeah, I think that's a good idea. Let's take a step back and, think about what all this means for you, the listener. Even if you're not going to, go invest in Marathon Nextgen, their story tells us a lot about what's happening in the real estate market in Mumbai, maybe even in India as a whole.
That's a great point. So before we get into all those big trends and how they might affect you, we'll take a quick break. We'll be back in a moment to continue this deep dive into Marathon Nextgen Realty Ltd. All right, so we're back and ready to keep looking at Marathon Nextgen Realty Ltd. We've talked about their finances, that merger they did, that revenue sharing agreement, and all those new companies they're buying. But what does it all mean, for like regular people who are interested in real estate, maybe even thinking about investing?
Well, one of the first things to think about is that, Marathon's performance, especially that drop in their revenue, could be a sign that things are slowing down in the Mumbai real estate market.
Oh, really?
Yeah, it happens. It's normal for markets to like go up and down, and things like interest rates going up or, investors getting nervous, that can definitely have an impact.
So if you're thinking about investing in real estate, I mean, whether it's in Mumbai or somewhere else,
Mhm.
Marathon story is like a good reminder to, do your homework. Don't just jump in because you see a fancy new building.
Exactly. You got to look past the marketing stuff and really understand what's happening in the market. What are interest rates doing? How's the job market in the area? What about those local rules and policies about real estate development? Understanding the bigger picture, that's really important.
Yeah, it's like checking the weather before you go on a hike. You don't want to get caught in a storm.
I like that. And just like you wouldn't put all your hiking gear in one backpack, you shouldn't put all your money in one investment. Spreading things out is key.
So don't just bet on one luxury skyscraper.
Yeah.
Maybe look at some smaller properties, like houses or apartments or even some commercial spaces. Spread the love.
Exactly. Now, let's go back to those acquisitions Marathon made. Remember, Conchi Rehab Private Limited, them joining up could be a sign that Marathon's really getting into that redevelopment market in Mumbai. There's a lot of opportunity there, taking those older buildings and turning them into something new and, desirable.
And those Nexon companies, Nexon IT infrastructure and Nexon water management, those still seem kind of weird for a real estate company. Is Marathon taking a big risk here, or is there something bigger going on?
It might seem like a risk at first, but if you think about the long-term needs of these huge real estate projects, it makes sense. Good internet, that's a must these days. And with everyone worried about water, especially in cities, having people who really understand water management, well, that could give Marathon a big advantage.
So it's like they're trying to control everything in their projects, from the internet to the water. They're not just building buildings, they're building little self-sufficient communities.
Yeah, that's a great way to put it. It's a bold move, but it could really pay off for them. They're basically predicting what their projects will need in the future and building those solutions themselves.
Okay, that makes sense.
It means they don't have to rely on other companies so much, and they can, make sure things are good quality and keep costs down.
And let's not forget that revenue sharing deal on the Future X project. It looks like they're willing to work with other companies and share the profits so they can get expertise or, not take on so much risk themselves.
Right. It's a smart move, especially for a project as big as Future X. It shows that they know they don't have to do everything on their own. By bringing in other companies who know what they're doing, they might be able to make the project even better and make more money.
The more we look at this, The more I see a company that's not just, reacting to the market, but actually trying to control their own future. They're diversifying, making smart acquisitions, and thinking about the long term.
I agree. It's really interesting to watch how they're doing things. It shows how important it is to be proactive and be able to adapt in any business. You can't just wait for things to happen. You have to anticipate what's coming, take some risks, and make your own opportunities.
It's like they're playing chess, always thinking a few moves ahead. But even the best chess players have to, you know, stop and look at the board every now and then.
Yeah, that's true. Before we get too excited about how well Marathon's doing, maybe we should, take a minute to summarize what we've learned so far and how it connects to you, the listener. What are the main things you should be thinking about?
Yeah, good point. Okay, first of all, Marathon shows us that real estate goes in cycles. Things go up, things go down. It's important to understand what drives those cycles before you invest your money. Don't let fancy brochures or a hot market cloud your judgment.
Yeah, do your research, look at the big picture of the economy, and remember, don't put all your eggs in one basket. Diversify.
Right. Second, Marathon's story shows how powerful it can be to think strategically. All those acquisitions they've done, the partnerships they've made, and how they're trying to build this whole little world around their projects. It shows they're not just going with the flow, they're making their own future.
Exactly. And lastly, even if you're not a real estate expert, what Marathon's doing gives you a glimpse into how the industry works and all the big economic forces at play. It's a reminder that even in a field like real estate, which has been around forever, being innovative and adapting is really important if you want to succeed.
So we've looked at Marathon's financials, talked about all their strategic moves, and what it all means for people who might want to invest. But before we finish things up, let's get a little more personal. If you were thinking about investing in Marathon Nextgen Realty Ltd, based on what we've learned today, what would be the most important things you'd consider?
That's a great question. I definitely want to know about their debt. How much do they owe, and how does that compare to what they own, and how much money they're making? If a company has too much debt, it can be risky, especially if the market takes a downturn.
Right. And I'd want to know about the people running the company.
Mm.
Have they done a good job in the past, when things were tough?
Yeah.
Do they have a clear plan for the future? Good leadership is really important.
Oh, absolutely. And of course, I'd want to dig deeper into their overall plan for the future. How are they going to deal with all the challenges and opportunities in the Indian real estate market? Are they too focused on one type of property or one specific area? Understanding their long-term vision is super important for anyone who wants to invest.
It's like we're putting together a puzzle. We have most of the pieces, but there are still some missing. And that's what makes this so interesting. We've gone beyond the headlines, found some hidden trends, and hopefully got you thinking about some new things.
Speaking of things to think about, are you ready for one last thing to ponder as we wrap up our deep dive into Marathon Nextgen Realty Ltd?
Always ready. Hit me with it.
All right, here it is. We've talked about all of Marathon's strategic moves, how they're diversifying, and how they're trying to control everything about their development process. Basically, they want to be the one-stop shop for everything their projects and residents need. But here's the question. Do you think this model, this approach of vertical integration and controlling the whole ecosystem, is this the future of real estate development? Or is it something that only works for certain companies in specific markets?
That's a great question. It's like asking if Marathon is making a plan for success that everyone can follow, or if they're just doing something unique that works for them.
Okay.
Maybe it's something everyone can follow, but I can see arguments for both sides.
Exactly. And that's what makes this so interesting. It's not about finding the one right answer. It's about thinking critically, looking at different perspectives, and forming your own opinions.
It's all about that deep dive mentality, right? We've really looked closely at Marathon Nextgen Realty Ltd's financials, found some cool trends, and hopefully given you a lot to think about. Remember, finance doesn't have to be boring or scary. If you're a little curious and have the right guidance, it could be a really interesting journey.
So keep exploring, keep asking questions, and keep diving deep.
And until next time, happy investing.
Yeah.
Yeah, that is a really interesting question. Is this, the future of real estate or just something special that works for them? I can definitely see how controlling, the whole ecosystem could be a big plus. You'd get better quality and be more efficient. But can other companies do it too? Is it, scalable?
That's what makes it such a great question. Imagine, real estate developers not just building buildings, but building whole cities, with their own internet, water systems, maybe even their own renewable energy. It could totally change how we live and work.
Yeah, it'd be like those futuristic cities you see in movies, like Totally self-sufficient and super efficient.
Exactly. But, doing that takes a ton of money and expertise in all sorts of different areas. It might not be possible for smaller companies or, in places where the rules aren't so friendly.
So maybe it's something that only big companies like Marathon can do, at least for now.
Yeah.
But, maybe they're showing everyone what the future looks like, where this kind of integrated development is just like the normal way to do things. It'll be cool to see how things change in the next few years.
Yeah, definitely. And that's what I love about deep dives like this. It's not just about understanding one company, it's about asking those bigger questions about where a whole industry is going. And, it's about giving you, the listener, the knowledge and insights you need to make smarter decisions, whether you're investing in real estate or just, living your life in this crazy, complicated world.
Well said. We've covered a lot today, Marathon's financials, those big strategic moves they're making, and even some predictions about what might happen in real estate development.
I hope you have a better understanding now of Marathon Nextgen Realty Ltd. You know where they stand in the market and the bigger trends that are affecting the industry.
Remember, knowledge is power. The more you understand about what's happening in the world around you, the better you'll be at making good decisions and finding opportunities.
So keep learning, keep asking questions, and keep diving deep.
And until next time, thanks for joining us on The Deep Dive.